From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming May 22nd Forex session in the Aussie dollar. As you can see, we did have a slightly negative session on Tuesday, but what I found most interesting about this candle is that it actually ended up being a bit of a hammer, and more importantly, at the 0.98 handle. With that in mind, it looks like we're trying to find some type of support, and why not? Quite frankly, this is a market that has fallen off of a cliff, so some type of bounce should be coming. What I suspect is that we will try to make it back to the parity level, which of course has a cluster there that will be interesting to watch. At that area, I suspect that there will be sellers coming back into this market to push it back down. And because of that, that's essentially what I plan on doing with the Aussie. It's just sitting here and waiting. I want it to get to my level first before I get too concerned about buying or selling. Obviously, it looks very negative at this point, so it's pretty easy to see why you would want to sell. Looking at the weekly chart, though, what I do find interesting is that we are approaching right around the 96.50 area, pretty significant support. So we'll have to see how that plays out as well. My suspicion is that we have a little bit of a pop coming, and then perhaps a move back down. What happens down here will be vital for the future direction of this market. It will be very interesting to see if the Aussies continue to cut, and they did suggest that that's a possibility during the last minutes. We could see a breakdown as the interest rate differential just evaporates. Adding to that is the fact that China seems to be slowing down a bit, and the Aussie is used as a proxy for the Chinese yuan, considering it cannot be traded, and the Chinese buy so much in the form of raw material from the Aussies. The two economies are definitely interconnected. With that being the case, I think we do have a little bit of a rally coming, but for me, I'm going to ignore that rally and look to sell it up here on first signs of resistance. On the other hand, the escape plan is if we manage to close well above the parity level, 50 pips or so above that on a daily chart, at that point in time, I'm more than willing to admit that the weakness thesis has failed a bit and go long at that point.